Good morning, traders, and welcome to Phoenix Blue's morning update. Today's Thursday, the 1st of December. My name's Nishal Patel, and I'm going to be giving you a quick synopsis of what's been happening on the market today. Now, obviously, we're running into the final month of 2016. There's a fair amount happening, and there tends to be a basis for most traders to try and avoid the December period. There's often two periods that most traders tend to avoid or stay away from the market, and the first is August, and the latter is December. August being low. A low period of liquidity in the market because people go on holidays, and December obviously the key holiday month, obviously with Christmas approaching. That being said, I know many professional traders will turn around to you and tell you that there are many profits to be made during the month of December, and I will be an advocate of that and say that if you approach your charts systematically, then there could be some very good trades out there. Now, as always, if you want to follow us on any of our social media, feel free to input one of these titles into either Instagram, Facebook, or Twitter. Obviously, if you have any questions, then feel free to send us an email at info@phoenixblue.co.uk. Alternatively, visit our website at www.phoenixblue.co.uk. Now, moving on forward, the first place we're going to start, as always, is just having a quick look at the global indexes. We're going to start off with the close of the American session. We've got a few, as we've seen, we've seen a slightly mixed bag in terms of the indexes and the global indexes here. We've seen a lot of the indexes pull down short and then spike up again, and then have a brief rally. In particularly those out in Australasia, as we can see on the Nikkei and the ASX, and predominantly most of them are coming from the mining sector or petroleum exporting companies, and that it's knocked on slightly. We're down slightly on the main indexes here in Europe right now. No doubt there's going to be a bit of a seesaw effect, especially with what's happened on yesterday's news, and we're gonna flow on to that in just a moment. Just have a look at today's announcements. The very next announcement that we've got coming up is manufacturing PMI coming out on the sterling. That's going to be at 9:30 this morning, so it should be quite interesting. Sterling's rallying slightly, sitting on the 125 mark. Again, this is a chart we're going to have a look at in a moment as well. We did have PMI coming out on the Chinese yuan. That has briefly has given it a slight push. But later on, we've got some key data again coming out on the USD unemployment claims, so the fortnightly unemployment claims coming out, and again, manufacturing PMI from the ISM. On the USD as well. So remember, it's a big week for the greenback. Not only have we seen a lot of strength on it, but we do have NFP. It's NFP week, so we do have ADP came out yesterday. Obviously, we do have the non-farm change coming out at 1:30 GMT tomorrow, so 8:30 Eastern time. Tomorrow, so definitely something to be aware of, and please remember and manage your stops and trades accordingly. Now, moving straight onto the charts, I think is a good place for us to start right now is the US index, or the US dollar index, I should say. After testing this level of support at around the 100, we saw that the dollar index really gathered some momentum yesterday, pushing that 101 level. As we've seen today, it's just sitting just above it right now, but definitely came very close to breaking that 102 as we saw on the high of yesterday's buzz, the daily time frame we're seeing. That has obviously had a knock-on effect, and knocked onto a number of our charts, which we're going to have a look at. But the big talking point, and I think a lot of the movement has come off one chart in particular, or it doesn't matter if you're looking at Brent or WTI. We're going to have a look at WTI right now. It's displayed as XTI on this particular chart. Have a look at this daily time frame. As we see, we've seen a break of the $50 a barrel. And how has that come about? Many of you are probably asking. I'm sure many of you already know. After you've observed a lot of the news announcements and key data that has been coming out, it seems that there seems to be some agreement on a cut in output from many of or a couple of the OPEC countries predominantly, but there is a non-OPEC country in there which has also agreed to cut output, and that is Russia. So we've got we've definitely got some agreement here and some accord from some oil producing countries and some rather large oil producing countries to cut output. That in turn obviously has lifted the price of crude over the $50 a barrel, which is obviously a significant level. And as we can see on this chart here, that $50 has only been broken a few times this year. So we can see all the way back to April. I can obviously move my chart further back and show you a slightly better scope of how it's performed this year. As we see here, there's only been a few occurrences as of 2016 where a price action has lifted above that $50 a barrel, and the highest it's reached was just that 52 level that we saw towards the end of September, and as we saw it double topped and in September and October, and then came back down to that 43 mark, which is something we've been trading. But now it's back to that $50 a barrel. It seems, remember that there is still talks happening, and we're still not out of the blue yet, and obviously the effect of the dollar and the strength of the dollar is to a certain extent quelling this chart as well. So it's something to take a note. Now, moving on forward, we did say that the greenback did rally strongly, and we can see that the best place to see that for us here is most certainly this chart. So we'll have a look at the Japanese yen on the daily time frame. As we see, Japanese yen did have a mammoth day yesterday, breaking that 114 mark, taking out its previous high, and in fact, through the session overnight, creating a new one, currently resting just above 114, 114.30 circa. Looks like, as we've been saying, looks steady for it to continue its ascent. Probably looking in and around that 115 to potentially 116 area. I'm guessing closer to the 116, really dependent on NFP data as well tomorrow, how things pan out. Remember, we do have the FOMC statement coming out in a matter of just over a week and a half as well. So that should have a knock-on effect. But most certainly the big talking point right now is the price of crude and how that is obviously having a knock-on effect to various stocks, as well as obviously indexes, and its knock-on effect to some currencies. Just having a quick look at sterling right now. We're just having a look at the daily time frame. As we see, broken this 382 fib, just resting just underneath my 50 moving average right now. But the key thing here is has broken that 1.25 level, currently sitting at 1.25288. So literally doing very well. Probably expect this to regain some solidarity, and please remember that despite the fact of the surge on the greenback, we haven't seen a huge movement on price on cable as well. So that's something to consider. Again, very similar here on the euro. Again, having a look at the daily time frame, slight pullback. Did have the movement of the US dollar on yesterday's bars. We can see seeing that surge, but looks like it's forming into what we would call an ascending wedge. Okay, so we could I'm sure you guys can do this at home, but I'm just going to do this really quickly on this chart like so, and just so you can see it, I'm just going to start drawing the tops of these. There we go, like so. Looks like it's driving into a wedge, so it should be looking for a breakout very shortly. Especially if we see, most certainly, we definitely see this inside bar on yesterday's off yesterday's bar as well. So something to look out for there. Just having a quick look. I'm just going to flick straight over to gold. Gold right now has obviously taken a bit of a beating, or a bit of a hammering, sitting just below that 112 level, and I say just below, it's actually at 1184, having tested the low 1100s. Apologies, it looks like my chart has just clicked off, so I'm just going to have to refresh that. I'll just bring that back, and it seems like I might have to restart my system. Apologies for this, guys. So, guys, I'm just going to move straight on to another chart. A key talking point right now is the New Zealand dollar. This is a chart which we have been looking to take advantage of and exploit. Has been doing very well on the short side. Has double bottomed and used the 200 effectively as a neckline, retesting effectively now off that double bottom. So we could potentially see a continuation of this movement long. But realistically, as we saw yesterday on the greenback, it's brought it back down to that neckline right now. Please remember that we have been shorting it here today. Our prognosis on this is still on the short side of on the QE, but most certainly with the technicals in play, you combine the fundamentals and the technicals together. And if you want a greater understanding of how to do so, again, feel free to pop us an email at info@, phoenixblue.co.uk, or even to myself, initial@phoenixblue.co.uk, and we would be happy to help out. Remember, GDT is a big factor on this particular chart, so we're most certainly going to have some movement, and we are very close. In fact, right on the nose, or on the cusp of a trade right now. So if anyone wants to know how to get into this particular chart, then feel free to again send us an email. Okay, guys, until next time. In fact, we're just going to have a quick look at that Aussie, in fact, the gold chart right now, and see what's happened. There we go. So it has updated. We see a break of that 1172. I was thinking that's a little strange right now as I flicked over to that daily, breaking down through that level, which was a key level. The key level for me was that 1200 level. Now it's broken down to that 1100. Probably expected it to come down to that 1100 mark before we see any kind of degree of retracement on this. Again, this will most certainly be driven by the dollar as well. Let's not forget how low this really is, and there we go. We can see a clear reflection of how gold has really lost value in the last 3.5, 4 weeks. Again, guys, any questions? We'll be happy to hear from you. Until next time, happy trading. Goodbye.